Welcome to The Explainer. Okay, let's get right into it. We're talking about Cisco, the networking giant. They just dropped some huge news, and it all comes down to one of the hottest topics on the planet right now: AI. So here's the deal: Cisco didn't just have a good quarter, they had a great one, blowing past expectations. But, the really interesting part is the why behind it. Their big bet on AI? Well, it looks like it's paying off, and way faster than even they thought it would. All right, just a quick but really important heads up before we dive any deeper. This is not financial advice. We're just breaking down the information. So please always do your own research before making any investment decisions. Okay, so let's get into the numbers. I mean, to really get the whole AI story here, you first have to see just how strong the company's performance was this quarter. First up, the top line. Cisco brought in a huge $14.7 billion in revenue for Q4. Now, that's not just an 8% jump from last year. More importantly, it absolutely crushed what Wall Street was expecting. And yeah, it's pretty much the same story when you look at profits. Their earnings per share, or EPS, came in at 99 cents. Now, I know that might not sound like a huge difference, but it beat the expert consensus of 98 cents. And trust me, in the world of high finance, that's a solid win. So you might be asking, where did all this strength come from? Well, a huge piece of the puzzle was their main business, the networking division. It surged an incredible 12%, hitting over $7.6 billion. This is like the engine room of Cisco, right? And it was just firing on all cylinders. And all of that really sets the stage for the real story.
Okay, and this is where things get really, really interesting. Because this strong performance, it isn't just about their usual business. It's about a brand new, massive growth engine. And that engine is AI.
So what does Cisco actually do in the AI space? It's a great question. They aren't building the AI models, like the ones you chat with. Instead, think of them as building the superhighways for AI. They make the specialized, crazy fast networking gear, the switches and routers that connect all those powerful computer chips inside a data center. That's the critical hardware they sell. And the demand for that plumbing, it has been absolutely staggering. Get this, for the whole fiscal year, Cisco booked $2 billion in orders just for its AI gear. Let's be really clear here. This isn't some little side project. We're talking about a massive, multi-billion-dollar business for them now. And here's the real kicker. That $2 billion number, it's literally double what the company originally told investors they were aiming for the entire year. So they didn't just meet their goal, they completely shattered it. And that tells you that demand is picking up speed at a wild, wild pace. So, okay, you've got record numbers, you've got an AI business that's just exploding. The stock should be soaring, right? Well, that's not exactly what happened. And that brings us to a bit of a puzzle. Yeah, despite all of this amazing news, the stock actually dipped about 2% after the market closed. So what gives? I mean, record revenue, you beat on earnings, you double your AI target, and the price goes down? This is exactly the kind of thing that makes investors just scratch their heads. To figure this puzzle out, we have to look past the immediate stock reaction and really tune in to the long-term story Cisco is telling everyone. This isn't just about one good quarter. It's about a huge strategic bet on the future. And honestly, who better to explain it than the CEO himself, right? Chuck Robbins didn't just call the AI demand a good trend, he called it a massive opportunity. So the key takeaway here is that the people running the company, they're playing the long game. They're focused on riding this huge wave, even if some short-term investors are getting a little nervous. And you can see that confidence baked right into their forecast for what's next. For the coming quarter, they're expecting revenue to stay strong and for profits to be right up there too. So the message they're sending is pretty clear. They are not hitting the brakes. And on top of all that, they're also proving just how financially healthy they are. They returned a staggering $2.9 billion to shareholders in just this one quarter through things like stock buybacks and dividends. That is a huge sign of a mature, confident, and very, very profitable company. So that leaves us with one final, pretty interesting question to think about. You've got a company that's firing on all cylinders. Its AI business is growing twice as fast as anyone expected. So when you see these little market jitters, you have to wonder, could this be a major opportunity for anyone who's in it for the long haul? And that's our breakdown for this explainer. Hey, if you found this useful, it would mean a lot if you'd like and subscribe. It helps us make more deep dives into the topics that are shaping our world. Thanks so much for tuning in.